Whenever you invest your money, it is often advised to diversify your investments in stocks and bonds, right? But do you know how stocks and bonds are different from each other? Well, for any investor, it is crucial to know the difference between bonds and stocks. Only then you would be able to make wise decisions about where and how to invest your money. Well, in this video, you will get to see a clear picture of bonds and stocks. So what are bonds and what are stocks? Bonds and stocks are often clubbed together when it comes to investing, but they are quite different in terms of behavior, returns, and risks from an investor's perspective. Both these investments come with their set of pros and cons. Well, let's get into the nitty-gritty of each instrument and decide which is a better option for you. What are stocks? Well, stocks are a set of shares of a particular company. Stocks represent partial ownership in a company. So when you buy a share, you get to own some part of the company based upon the number of shares you purchased. So since you own a share in a company, you are entitled to receive your share of the company's profits. But if the company makes losses, you bear the losses too. To help you understand stocks better, we have made a list which explains the characteristics of stocks. Profitability. Investing in shares can fetch you really high profits if you choose the right shares. Ownership rights. A shareholder is a part owner of the company, depending upon the number of the shares he owns, giving them the right to vote in managerial decisions. Risk factor. The risk here is on the investment you make, as the price of the shares keep fluctuating at the market level. It also depends on how good or bad the company is performing. You can end up with high earnings or can face huge losses. Returns. The return on investment in stocks is purely dependent on the performance of the company. Also, the company is not obligated to pay its investors any return in case of bankruptcy. So, what are bonds in the share market? Well, bonds are fixed income investments. They are considered as a loan issued to the companies, organizations, and even national governments by people like you and me. Let us understand some characteristics of bonds. Interest payouts. As mentioned before, the investor receives a fixed interest rate on the investment for a specified period of time in bonds. Bonds are also guaranteed return investments. Principal repayment. The principal amount upon which the interest was paid will be returned to the investor once the bond matures. Risk factor. In investment, the only risk you have is losses. Bonds are very low at risk in comparison to stocks. Returns. The returns are fixed in bonds. Everything in bonds is predefined. The time period, the principal amount, and the interest rate. The company is obligated to pay you even if they are bankrupt. The only drawback is that you don't have a chance to earn high profits as you can do so in stocks. Well, for a better understanding, watch the part of the video about differences between bonds and shares. Differences between bonds and shares. Stock is nothing but a part of the ownership of the company issued to the general public to raise capital. So when you buy stocks of a company, you become the owner of that company, proportional to the value of stocks. Bonds are fixed income investments and are considered a loan issued to companies, organizations, and even national governments by people like you and me. Stocks are issued by corporates, whereas bonds are issued by government institutions, financial institutions, companies, etc. With stocks, stockholders are the part owners of the company or firm. But with bonds, bondholders are the lenders to the firm. The form of return in stocks is with capital gain, bonus, and dividend, which are not guaranteed, but you would get interests as a fixed payment over the time period and principal amount once the bond matures. Talking about the additional benefits, shareholders get voting rights and bondholders get preference during liquidation and repayment. Well, now that you know about bonds and stocks, don't you wish to invest some money in the same? Well, for that, you need a Demat account. If you don't have one, you can get one in just a single click. Find the link in the description below. Well, this was all in today's video. Next time, I will see you with one such another amazing topic to share with you. Until then, do subscribe to our channel, comment below if you have any questions regarding the topic that we discussed today, and share this video with all your trader friends. I am Rohit Bhosle signing off. I will see you in the next video. Till then, you have an amazing time.
Investment in securities markets are subject to market risks. Read all the related documents carefully before investing.